Ladies and gentlemen, my fellow Rezolvians, welcome to the channel for another pretty crazy update, okay? Yeah, we're talking Rezolve, the big catalyst today. The stock is down 7%. There's a lot of people that are going to be confused about this, and there's a very specific reason, okay? Now, what's more important is not today, but what's coming next for the stock. You can't change the fact you're down about 7% today. But if we can understand what is coming next, then we put ourselves in a position to win. So we're going to break this down, put it into context, okay? And everything you need to know, what the new developments are. Hit that like button as well as subscribe to the channel if you guys have not done so already. Check that link out down below in the description of today's episode if you guys want to come trade and invest alongside us. Now, while this was not my base case expectation, Rezolve was up about 7% or so. At one point, it was up 10% in pre-market following the latest developments today. The stock hit a high of $4.21. It is back down today around 7%, down to about $3.70 per share or so. Again, this was not my base case. I expected the stock would do well today, but I'm not super shocked that this is happening. On this channel, we've talked about this for the last couple of days, where Tuesday, today, was likely not going to be a great day for the markets. Why that is because of the big catalyst coming tomorrow and the almost like hedging requirement that Wall Street has for this. Because tomorrow has such a wide distribution of potential outcomes, you know, some of those outcomes could be really negative, some could be really positive. Wall Street almost has to hedge for this. Okay, so Rezolve, you know, down 7% is definitely not great. Soundhound's down 4.5. UiPath is down 9. Poet's down 3. Datavault down 7. Okay, so Rezolve is kind of just trading roughly in line with a lot of, you know, other AI stocks today. It's not reflective of the news today. Again, the reason is not a deficiency in the stock this time around. I don't think there's a lot of the same level of manipulation that we had like back on December 16th, 17th, and 18th. I think today is a little bit easier to understand because tomorrow is such a big catalyst. So in other words, I tried to think of an analogy to this, right? Because you guys know I like my weird analogies. But there's maybe the best way to describe this is if you won the lottery today and got really good news today, but, you know, something bad could happen tomorrow, right? If you won $400 million, but we're told you had 24 hours to live, maybe that's a bad analogy. How excited would you actually be? What I'm trying to say here is, yes, we had this massive good news today from Rezolve. Much better than anyone thought. Much better than I even thought. But there's a possibility that things go really wrong tomorrow with the Supreme Court ruling. So you're only going to get so much of the benefit of the doubt today. So if the Supreme Court ruling is not as bad as feared, which is my expectation, you likely see the good news of today get reflected in the stock tomorrow. I think you're going to get a buy the news event. Again, because Wall Street, they have to be hedging for the worst case scenario, which is the Supreme Court says that all the tariffs are illegal, that you need to see payouts for, you know, all of the tariffs. Long story short, that would mean the government would have to issue a lot more bonds. That would drive bond prices lower and interest rates higher. That puts a lot of pressure on unprofitable tech, puts a lot of pressure on small caps, and the AI trade more broadly, the high beta trade, the, you know, small caps, hyper growth stocks, okay? So That's the reason for this volatility in markets today. I know a lot of people are going to talk about the whole Jerome Powell Trump fiasco. While that's not great by any means, I don't think it's the reason for today. Okay. This Iran situation, a lot of people are going to say, well, that's not great. I agree. It's not the reason for today. A lot of people are going to talk about the 10% credit card interest rate cap and how if that is actually implemented, you're going to restrict the amount of lending in this economy. You've seen banks that have really took a hit from this in the last couple of days. That is not great either, but it's not the cause of today. The cause of the day today is institutions have to de-risk. They have to sell stocks. They have to raise cash. They have to hedge portfolios because tomorrow could be, in the worst case scenario, another April 2nd moment all over again in terms of volatility in markets, like a big drawdown. I think there's a very low likelihood of that. There's a lot of Republican judges out there. It would not appear that all the tariffs are going to be shot down. There's definitely an implication for national security with some of the tariffs that have been imposed, but some of them are going to be shot down. Now, again, when the worst case scenario is so large, there's a lot of hedging taking place. And I think anything besides like a really bad ruling, like if it's kind of in line with expectations, I think it's going to be better than expected. I think most tariffs are going to stay in effect. And some industries like clothing or furniture, things like that, might be deemed not important for national security and be shot down. But again, Wall Street's already pricing for that. There's less than a 30% chance the Supreme Court agrees with Trump on everything, and there's no change on tariffs. So people are already expecting, a pretty negative ruling. So the odds definitely favor a buy the news event here. Now, I've spent so much time talking about this because when we get into the actual news for Rezolve, you're going to see like it's not going to make sense to you why the stock is down 7% today. Okay. And it's important context that we just went over. Now, it says here, Rezolve AI guides to $350 million for 2026 revenue and $500 million ARR exit run rate. I mean, for context, analysts were at about $170 million in revenue next year. So this is double what analysts were expecting. It says here, the company signals nearly 10x growth for 2026 as agentic commerce becomes core enterprise infrastructure. It says Rezolve AI, a leader in agentic commerce and AI-powered customer engagement today, issued updated revenue guidance for 2025 and 2026, which are anticipated to materially exceed market expectations as enterprise adoption accelerates across its platform. For full year 2025, the company is guiding to for full year 2025, Rezolve now expects to deliver at least $40 million in revenue, exceeding current analyst consensus. For full year 2026, the company is guiding to approximately $350 million in revenue, nearly double prevailing market expectations of approximately $170 million for the period, representing nearly 10x year-on-year growth. Rezolve AI reaffirmed its previously announced expectation to exit 2026 with a minimum of $500 million annual recurring revenue, implying approximately $40 million of monthly revenue by December 2026. So beating numbers across the board. Exceptional guidance that we got today, which was what we were expecting, but much better than Wall Street was expecting. Now, we need to remember that, 2026, they have this $500 million annual recurring revenue target by the end of 2026. So basically $500 million in revenue for 2027. The company is setting these targets to beat them, right? Besides 2025 revenue, they're probably setting that pretty close to what it's going to be. It's going to be a little bit over 40 million, but nothing too crazy. They set the 350 million in revenue target for next year or for this year to beat that, and they're keeping the 500 million in ARR to raise that at some point in 2026, most likely. right? I think inevitably by, the end of 2026, it's probably going to be around $1 billion or 750 million for, expected revenue in 2027. But I think at the same time, they want to be a little conservative because they don't know just how much growth is going to continue from a logical standpoint. And they want to be able to comfortably beat those targets, right? Now, says here, record momentum and operating scale. Rezolve exited 2025 with approximately 209 million in ARR, following a record December in which revenue is expected to exceed 17 million, marking the company's first profitable month and demonstrating the operating leverage of its model. During 2025, Rezolve scaled rapidly to more than 1,000 employees, 24 global offices, and over 650 enterprise customers. The company's platform processed more than 51 billion API calls, reached over 340 million unique users globally, and supported hundreds of millions of live customer sessions and transactions, underscoring Rezolve's position as live enterprise-grade infrastructure operating at global scale. Enterprise adoption and institutional confidence. It says Rezolve's customer base includes leading global brands and institutions across retail, fashion, financial services, and payments. The client roster now includes major global brands such as Adidas, Burberry, Gucci, H&M, Harvey Nichols, Dr. Martens, Converse, Tommy Hilfiger, Puma, Target, Standard Chartered, and Commerce Bank. In 2025, the company also secured significant repeat institutional investment, including a $50 million strategic investment, followed by a $200 million additional commitment from new fundamental investors, reinforcing confidence in Rezolve's execution, scalability, and long-term platform strategy. It says, throughout 2025, Rezolve deepened strategic partnerships with Microsoft and Google and advanced its initiative to integrate AI-driven commerce with next-generation payment infrastructure. Dan Wagner here, CEO of Rezolve, says 2025 was the year Rezolve proved that enterprise AI-driven commerce is no longer experimental. It is live, scaled, and delivering ROI. The guidance we are providing today reflects contracted demand, accelerating deployments, and a platform already operating at global scale. As we enter 2026, our focus is execution, operating leverage, and cementing Rezolve's position as the control layer for the next era of commerce. So all of this, super exciting, right? Just incredible. The growth in this company is ridiculous. Okay. The stock today is not reflective of that. Again, the average analyst price target for Rezolve is $9.29. The stock is $3.76. Okay. The stock is significantly undervalued. Now, coming out tomorrow, we're likely going to get updated, price targets and commentary from analysts. I would imagine you're going to see price targets go up on this, especially if you actually listen to the call, right? There was one part of the call where the company talked about profitability, and basically they said that, look, we can focus on profitability and be profitable whenever we want. Okay. But they're in this growth phase right now where they want to capture as much of the market as possible. And that's exactly what you want, a hyper growth company that is in a new market field to be doing, right? Hence why Amazon was unprofitable for 20 years, right? They continued to invest in the business, continued to grow, continued to scale until they were at a point in which it made sense to focus more on profitability, right? That is what hyper growth companies should do. And when you have such a large market opportunity ahead of you, you should focus on the growth first. Okay. And that's what the company is doing. So that also is pretty exciting. Like, look, they could be profitable whenever they want. And I'm sure there's going to be moments in which the company is profitable, quarters here and there, but they're really focused on growth at this point. And when you're doing 1,000% year-over-year growth, you should focus on that growth versus near-term profitability. Okay. Now, none of that is the reason the stock, again, is down today. And that's why we talked so much about the context of this situation. Okay. Because, you're going to hear all of this news specifically with Rezolve and what the company said, and you're going to be confused to why the stock is down today. It really all has to do with a tactical, hedge before a big catalyst like tomorrow. In fact, CPI today came in much better than expected as well. Core CPI came in at 0.24%. The expectation was 0.36%. The difference there is Wall Street was expecting annualized 12-month CPI at 4.32%. Taking the 0.36 number and timesing that by 12. We came in at 0.24%. That gives you a 2.88% 12-month annualized CPI number. That's how big of a beat CPI was today. Still didn't have a positive impact on the markets. I didn't expect it would. As we talked about, for the last couple of days, I didn't think CPI was going to really have any effect on this market. And I proved to be correct in that. But again, tomorrow, that's the big catalyst. Now, we have seen some option activity today, some unusual option activity. Keep in mind that a lot of the unusual option activity in the past week has really been focused around this Friday's expiration, that $5 call. Okay, there's been a lot of activity on the options chain for Rezolve, specifically targeting the stock to be like $5 per share by the end of this week. Now, again, comes down to the Supreme Court ruling. I do think we're going to have a very strong positive day tomorrow based on that ruling and the news that we got today. It's just going to be a delayed effect, in my personal opinion. Now, we have another one of these interesting or unusual trades today from some big money investor. It is a $72,000 trade with a positive order value of 100%. Okay, it is a January 14th, 2027 $3 call with a break even of $4.80. They bought 400 of these options with a total market value, again, of $72,000. Okay, so Wall Street is positioning bullishly in, Rezolve options. Now, in other news, we did get a new short interest update that was released yesterday. Short interest is officially 24.66% on December 30th. This is after the recovery from that low we hit on December 18th. So you actually went up 43% from the December 18th low to the high of December 29th. You went from $2.19 to $3.11. I would assume that some Wall Street folks covered on their short positions in that time. Even then, by December 30th, you still had 24.5% short interest. Rezolve short interest today is being estimated at about 29.08%. It is estimated there are 34.5 million shares that are sold short. That is a dollar amount of about $139 million with a share utilization of about 94%. So there's not a lot of shares out there to cover with if Wall Street wants to start covering on their Rezolve short positions. Okay. Now, over on StockTwits, you can see sentiment extremely bullish at 91 today. Yesterday, it was at 86. You actually gained about 400 watchers on StockTwits in the last 24 hours. So, interesting to say the least. That's a big wild card catalyst for 2026. Does Rezolve gain that retail investor attention, right? If retail investors really begin to see Rezolve, and start to pay attention to Rezolve, you could see, quite a bit of additional buying pressure and upside in the stock this year. I don't know if that's going to happen, but it's possible. Message volume today, extremely high at 80. Yesterday was high at 73. Participation ratio, extremely low at 15. Now, this article from StockTwits says Rezolve stock declines 9% despite strong revenue outlook. Retail is buying the dip. Okay. And, that's exactly it. Like this is easy to buy the dip on this news, right? Because inevitably it's going to be represented in the stock, right? You can't just raise guidance like, issue 10x growth guidance for 2026 and the stock's going to be down on that, right? Especially when it's trading below its fundamental valuation. It's really only a matter of time in that scenario that the stock is reflective of the guidance that was issued today. I don't know when that happens. I assume tomorrow, okay? With the Supreme Court ruling, I think that could prompt a lot of risk on behavior in this market. Again, because Wall Street, they hedge in the risk, areas of the markets, right? They're not hedging this market in S&P, options. They're hedging this market in shorting small caps, shorting the AI trade, selling small caps or the AI trade. One way to hedge is just by selling, raising cash to be able to buy if markets do fall. That probably makes the most sense in terms of hedging for tomorrow. It's probably what a lot of Wall Street has been doing for a while now. Probably why we had an inverse Santa Claus rally. Okay. So that Supreme Court ruling is going to come out at 8:30 in the morning. And I think it's going to be a huge catalyst for Rezolve and for, again, the rest of the AI trade, which did not do well today either. Like Rezolve is not the only stock that was down a lot today. If Rezolve was the only stock that was down like this, then I would say maybe there's a little bit more manipulation. Maybe there's, a short attack happening on the stock. I actually don't think that is happening today. I think it's logical. You can only get so excited about good news right before a potential very negative catalyst. There's only going to be so much excitement about whatever today, right? There's too much potential volatility, especially in the riskiest areas of this market, perceived riskiest areas, like small caps, like the hypergrowth AI trade, right? That's why I wasn't exactly bullish on today. Now, I expected Rezolve would do well regardless, but I'm not surprised. The stock's now down about 4.5%, right? It's not surprising. The MACD now looks really good. MACD is at 0.19. Signal line is now positive at 0.03. Typically, that's a sign of a larger rally to come. We did get some rejection at this 100-day moving average today. Again, high of the day, $4.21. Got rejected there. 100-day moving average at $4.17 per share. But I think tomorrow we should be able to pretty easily break that to the upside. Again, my expectation. We're going to get analyst price targets and new commentary as well coming out tomorrow. That's my expectation. Typically, analysts cover the news the next day. So we'll be on the lookout for that, and we'll keep you guys posted on that as well. So let me know your thoughts on this down below in the comment section. I still believe Rezolve likely to be a $5 plus stock by this Friday. Like that just it kind of made me more bullish, right? Especially with the update that we got. It was better than I was expecting. 250 million, 300 million for 2026 revenue. That was kind of in the ballpark of my expectations. 350 million in revenue with obviously the intent of actually beating that. That's better than anyone thought. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you guys have not done so already. If you guys want to come trade and invest alongside us, check that link out down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.